Good morning. I'm Rhian-Mari Thomas, Chief Executive of the Green Finance Institute, and it is my pleasure to welcome you back to day 2 of our Green Horizon Summit at COP26. Today, our GHS agenda will focus on Finance Day. We're expecting a flurry of announcements, and we will be streaming content directly from the Blue Zone. We will also focus in more depth on how we can mobilize private capital into emerging and developing economies. To get the day started, I'm very pleased to hand over to Axel Threlfall, Editor-at-Large at Reuters, for our Wake Up to GHS at COP26 show. Axel, over to you.
Thank you very much indeed, Rhian-Mari. Good morning, everyone. Day 2 of the Wake Up Show. I am from Reuters, so my focus very much on the news here. We've got another super lineup for you this morning. Today, as Rhian-Mari just said, is Finance Day here in Glasgow. Our focus will be on that. And as we've just heard, on how we mobilize private capital into emerging and developing economies. So accelerating the flow of capital into climate-smart projects in these markets while helping to ensure a just recovery from the pandemic. Before I introduce our speakers, quick word on what's dominating the headlines. It is GFANZ again with news. It now represents 40% of the world's financial assets and has up to 130 trillion of private capital committed to hitting net zero emissions by 2015. We tried to squeeze that number out of Mark Carney yesterday morning, but they did wait on that announcement. That isn't all. Mike Bloomberg will join Mark Carney as co-chair of GFANZ to fight climate change and put markets to work, as they've said in a piece that they've penned together. The other big focus is on UK Chancellor Rishi Sunak, who speaks here today, and news that every company listed on the UK Stock Exchange must publish net zero transition plans from 2023. The Chancellor promising nothing less, it seems, than a rewiring of the entire global financial system, which will make the UK the first carbon-neutral financial centre. The UK has also convened over 30 other countries to back the creation of new global climate reporting standards by the IFRS Foundation. So those are the very latest headlines. There'll be plenty more, of course, coming out of our shows throughout the day and indeed from the Blue Zone. Let me get to our guests. I'm going to mention everyone now, and then I'm going to have a quick fireside with Howard Davies, who is chair of NatWest Group, former deputy governor at the Bank of England. We have Gonzalo Muñoz, a Conference of the Parties champion for Chile and an entrepreneur. Baroness Shriti Vadera joins us out of London, the chair of Prudential. Katherine Stodulka, director, Blended Finance Taskforce at SYSTEMIQ. Richard Phelps is co-head financial institutions, Aon, and Marilyn Waite, a managing director at the Climate Finance Fund. So we will get to everyone in just a moment and have as lively and as organic a conversation as we can. But Howard, I'd like to kick it off with you, if I could, just for a few minutes. In fact, let's react to the news first. GFANZ, 130 trillion, Mike Bloomberg co-chairs. What do you make of that?
Yeah, well, good morning. First of all.
Good morning.
Just to ensure we're still all awake. I very much welcome GFANZ's announcement today. We've been quite closely involved in it at the earlier stages. My chief executive, Alison Rose, has been particularly closely involved in it. And I think that it's great that we've got so many more people engaged. What I particularly focused on in the announcement this morning was the approval of the idea that the IFRS Foundation, that's the people who oversee the international accounting standards, should set international accounting standards for this. Now, that maybe seem a sort of slightly geeky point to focus on, but what we have looked at and what we found is difficult is the number of different reporting standards that there are. There's the Taskforce on Climate Disclosures, there's the Sustainability Accounting Standards Board, etc. And these do need to be corralled into a framework which allows things to be compared and contrasted. And if you link that to the requirement for companies to publish transition plans, that really gives us the right sort of nexus. Because one of the problems in this area, which the climate NGOs and others have always pointed to quite rightly, is that, you know, people report this and they report that and they say they're green and maybe they are, but maybe they're greenwashing. You know, all of this, these standards have not really been common. Yeah. And I think this is a big leap forward in that area.
So we're corralling is the word you used. And in fact, that's a word we used with Mark yesterday when we talked about his role as conductor, if you like, of a band of buskers and pulling them together into an orchestra, if you like, playing from the same sheet. All right, so you're positive on that. What about Mike Bloomberg co-chairing?
Well, Bloomberg himself has, of course, been one of the big sponsors of the Sustainability Accounting Standards Board, which is one of the bodies that will need to be brought in order to make a sustainability standards board, which is what the IFRS Foundation are proposing. There's a lot of acronyms in all of this, but so if he can be brought into that and fold his previous experience and his previous initiative into this, that's a big step forward. So I like that.
Okay, and Rishi Sunak speaks today, of course. It was a big announcement. It came out overnight, positioning the UK in quite an exciting way.
Yeah, well, that looks good. I mean, I think we're well positioned in a lot of ways, actually. In fact, as significant as the announcement today, I think, was the earlier announcement that Rishi Sunak made in about March, I think, where he gave the Bank of England an explicit remit in this area. Yeah. Which I don't think any other major central bank has yet got. And that, as it were, makes an honest woman of the old lady in giving her a basis on which to adapt climate change and put it into monetary policy and into banking regulation.
All right, well, that segues nicely to that, because I want to get into that in a little bit more detail. I think it was Janet Yellen who said not too long ago financial regulators lack the expertise to make environmental and climate policy. I wonder how, well, one, do you agree with that? I imagine you don't. Two, how interventionist, hands-on should central banks and regulators be in this space?
Well, there's two things about what Janet Yellen said there. Is it the case that they had the expertise to integrate environmental policy in their regulations? You're probably right, they didn't. Whether they should have is a different question, and I think they should. So there's a question of where you are and where you want to go. Now, there's been a lively debate in the central banking world about this. Probably the UK and France and the Netherlands were in the lead, I think, on setting up something called the Network for Greening the Financial System. Initially, the Fed didn't want to be a member of that under the Trump regime. Fed is independent, of course, but curiously, its policies changed when Biden became president. And they then decided that they would join and would play in this. And the NGFS has been developing some interesting methodologies. But still, there are those who say, in the ECB Council, some of them, and in the Fed, well, you know, what legitimacy do we have in order to integrate climate into banking regulation, which really has a different purpose? And they say, well, you know, why would we not integrate human rights or into banking regulation, etc.?
Good point.
So I think that, you know, you do need to give the central banks some kind of cover for this activity and say that this is part of your mission. And the logic, I think, is pretty clear, which is that if you as a bank are lending to a business whose business model is unsustainable, and if carbon prices rise or if the law changes to ban the emissions that you are financing, then you're going to lose money, and this is going to be damaging for the integrity of the bank and for financial stability generally, then it's perfectly logical to integrate that into banking regulation and perhaps in the end to require banks to hold larger amounts of capital against riskier loans in a climate sense, which of course would increase the cost of capital to those companies. So that's the logic. At the moment, the technology is not really quite there to apply that logic to its full extent, but the Bank of England is this year doing a stress test, and we've just actually submitted our results to that, asking banks to say, well, supposing there is an increase in the carbon price, you know, what happens to your lending? Are you then exposed? Are some of your loans going to go bad because they're to companies that are not going to be viable? So that's what we're working through at the moment. I don't think it'll take too long. I think it'll take a year or two to get the data organised.
But that's
where we're going.
That's here in the UK, though. But everyone kind of needs to get on board, right?
Yes. I mean, I think this is an area, you know, you asked me, is it great that the UK is ahead? And I think this is an area where the UK is a little bit ahead. Not a huge amount. I mean, I think you'd probably find the Bank of France doing some similar things. And the Dutch Central Bank I would identify as well as being pretty much in the lead on this. So we're not, you know, right out front. But I think the fact of having a remit, the fact of doing the stress test this year, which I think others are going to do next year, does give us a little bit of an edge. I mean, there are some say, do you want to be at the bleeding edge of this, or do you want to watch how it develops? But I mean, I think it's good that we are advanced and we feel comfortable as a bank that we're working with a regulator who really understands the issues and where we can make progress together.
Something related, and it's this carrot and stick discussion. I wonder what your views are on whether you think banks should be penalised with extra capital charges if they don't move fast enough, if they're lending to fossil fuel companies, if they're missing targets. Where should this discussion go now?
Yeah, I'm not sure I like sort of penalise. I'm not quite sure why.
Maybe that's the wrong word.
You want to do that. I mean, I think that the logic is to say, should you have to keep higher reserves against lending that is more risky because it is vulnerable to increases in carbon pricing and changes in regulation which may make the business models unsustainable. And therefore, it's more risky, and therefore you should hold larger reserves against it. Now, we do that all over the place, so you have to have higher capital ratios if you lend someone a 100% mortgage because, that's more risky. We are looking now at the way in which we can integrate climate into mortgage lending as well through having green mortgages where we would say, well, if your house is more environmentally friendly, uses less energy, then the chances are over time it's going to be worth more, actually, relatively speaking. And if it's a very poor house from an insulation or energy consumption point of view, it's more vulnerable to price falls. Therefore, perhaps it should attract a higher interest rate because the bank is vulnerable to it falling in price, and therefore you ending up with a property that's worth less than the mortgage.
Sure.
So all of that, that's the way the logic has to work, I think. Penalising is not a great way of thinking about it, but proper risk-adjusted pricing and integrating climate into risk-adjusted pricing, fine.
Okay. Stay with us, Howard. I'm going to bring the rest of them in. And I do want to come back because I want to talk to you about SMEs and what NatWest is doing in that space, et cetera, et cetera. Right, let me bring you lot in if I can. Gonzalo, let me start with you because I know you published a piece with Mark Carney and Nigel Topping on the role of GFANZ. 130 trillion, fantastic. We've got to get that money to work now, though. We've really got to mobilise this and move it. And that is where most people seem to be most concerned, it seems to me. Are we slowly getting things right in terms of getting that money out?
Thanks, Axel, and great to be here. I would rephrase it. We're rapidly seeing things getting right. And I think it's important to realize, and I'm speaking here, as you said, as not only the high-level champion, but as an entrepreneur from the Global South that can bring another perspective to the conversation. First thing, we're talking now very bluntly and very easily about the 1.5 degrees. 3 years ago, the parties in a conference like this one just decided to take note of the 1.5 degree report. 3 years ago, there was nothing about positioning the 1.5 degree and the net zero emissions by 2050 as the main goal. A little bit more than 2 years ago, we started with the Net Zero Asset Owners Alliance with $2.4 trillion. It took us a little bit more than 1 year to start the second of the initiative, the Net Zero Asset Managers Initiative, in December last year with another around $9 trillion.
Yep.
So aggregated, it was about 13. So in less than 1 year, we've gone from $13 trillion to, and I would say, I don't want to spoil, but more than $130 trillion that we'll see today.
Okay.
That's massive. And people are even, of course, naturally doubting of what's happening here. Well, the money changed its position already. Let me give you one example of what it means, even from the Global South. One of the signatories of the Net Zero Owners Alliance, the Ontario Teachers Pension Fund, they joined in December last year. It took them like few weeks to send a letter to all of the CEOs of the companies where they're investing. Some of them utilities in the Global South. all of those CEOs called me and say, what is this thing about net zero and race to zero? What do we have to do? So I had to explain to all of them, what's the trajectory? You have to reduce your emissions in this decade to half of it, and then you have to reach net zero by 2050. But wait a minute, it's not only scope 1 and 2, what happens internally in your company, it's also scope 3. You have to start now speaking to your providers. And I remember one of them saying, wait a minute, I have 3,500 SMEs in my value chain. Well, start now. So a decision being made in Ontario is now, and I would say for at least 6 months, generating a conversation with SMEs in the global south that they know that they won't be providing the products and services to that major client if they don't reach net zero at the same time. That's the magic of what's happening now.
Okay. Very good, Gonzalo. Thank you very much indeed. We'll come back to that. Shriti Vadera, thanks for joining us. I think you're in a London studio. Why, in terms of this 100 billion, I think we heard John Kerry yesterday say it was at 98 or thereabouts. Clearly, we need to rebuild trust between developed and developing nations. We need to get that money moving. How would you characterize that task now, and are we moving this forward as slowly as well?
Thank you very much. Prudential is mainly involved in emerging markets, in fact, exclusively now involved in emerging markets in Asia and Africa. So if I could speak from that perspective, everything that's happening is incredibly exciting and a really serious step change. But what concerns me is that we seem to be better in talking about decarbonizing and disinvesting than we seem to be about talking about new money going into transition and alternative forms of energy in particular. So when we talk about Asia, we have a huge coal dependency, for example, and if we just focus on the carbon intensity of our investments and lending, then we would find ourselves actually having money come out of emerging markets rather than going into it, which is what we currently need. And for me, that essentially means we need to think about the public framework that would enable this 130 trillion or 98 trillion, whatever it might be, to get into the right places. One of the main cornerstones of that for me is carbon pricing. And there are also, we have to accept some elements that the private sector won't finance, and in particular, some elements of adaptation, which are not going to be commercial. These are externalities, and this is a global public good. So we need to find different ways of financing it. So I don't want to strike a discordant note. I just simply want to bring a bit of realism to what we're talking about that the private sector can do and what it is that we need the public sector to do in order to unlock this financing. Carbon pricing is the key.
Yeah, and we, okay, that's the carbon pricing bit. Let's talk about the MDBs a little bit here as well, and the extent to which they need to step up. I think Larry Fink said here in this studio yesterday that we need to reimagine the roles of the World Bank, the IMF, maybe even rethink their charters. What more does the private sector, well, what does the private sector, what do you want to see from the multilateral development banks?
I would like to see multilateral development banks being incentivized not by how much they lend, but how much they leverage the private sector, by them taking on the risks that the private sector can't take, and the private sector taking on the risks that we are able to take. So a fabulous example that is going on right now as we speak, which is being launched elsewhere, is the Asian Development Bank's Energy Transition Mechanism initiative, which actually was conceptualized within the Prudential, and that's being launched with the Indonesian and Philippines government. And that is a public-private partnership fund. We're going to consult on it, and that will have a fund that would help the retirement of coal plants, which could otherwise go on for 30 or 40 years, to help retire them early and then finance the alternative that needs to be created to replace the coal demand, not just for current demand, but also for future growth demand. remembering that there are 760 million people in the world who do not have access to energy, to any form of electricity today. There are 2.6 billion people who don't have access to clean cooking solutions. So it's not just the existing demand that we have to replace. We have to create new sources for those people that don't have any access today. Multilateral banks need to leverage by multiples more than the amount that they currently do, the private sector, by taking on risks that we cannot take.
Okay, I'll bring the rest of you in just a sec. But Howard, I just want to come back to you on this. You know, with your bank hat on, and Shriti with her bank hat on as well, how frustrating is it? Is the bigger policy context and public money, the MDBs, the fact that you're waiting in many cases for them to get their message right and get their ducks in a row? How frustrating is that? How impatient could you get?
Well, you know, you can be impatient, and maybe that makes you feel good for a little while, but it isn't terribly constructive, probably. I think that looking domestically first, you know, we've now got the government set out a net zero strategy, which is a big step forward. That's only 10 days or so ago, and I think it's 360 pages of it. It was tough to digest. I think we would like to see a clearer trajectory on carbon pricing. That seems to me to be the big thing that the public sector can work further on, both domestically and internationally. Because when you go back to doing these calculations about the riskiness of your lending and the cost of it, etc., then you know you really need somewhere to be able to factor in what you think is going to happen to carbon pricing. Yep. Because otherwise, you know, the numbers don't really make a lot of sense. And so that's what we really want. And I think it is frustrating that you've got a lot of governments who are dancing around that question. You know, here we have supposedly a fuel price accelerator, which is disapplied every year. You know, that was the idea that George Osborne had, to give people certainty about the trajectory of carbon prices, at least in fuel oil, for a long period ahead, which allows you to factor that in and brings forward some of the investments that you might otherwise want to make. It would be great to have some certainty about the evolution of carbon pricing.
Yeah. Katherine, if we look at the numbers, and this is the backdrop, and this is what everyone's holding on to: green bonds versus bonds and loans for fossil fuels. We see that green finance is competitive. You know, we see that green finance is investable. Mobilization ratios is something we look at. I know it's something you look at as well. The amount of private capital mobilized for every public dollar. How do we stop the decline there? How much of a focus do you have on that?
Yeah, I wish you'd asked me the question before as well. What can the MDBs do?
Well, listen, you throw that in as well.
Let me jump in on that one. Yeah. Just to remind you of the numbers, it's less than $1 of private capital for every public dollar.
50 cents in some cases.
Exactly, right? In some cases it is. And that's just not good enough. When we talk about what the MDBs can do, they can set mobilization targets. They have to go in earlier. They have to focus on pipeline development, and they have to work with the countries where we are wanting to deploy capital. So when we talk about this shift out of brown assets and into green assets, I think we need to talk about the investment opportunity. So let's talk about Asia. Green buildings, $17.8 trillion is the green building investment opportunity in Asia. That's huge, but often private investors will have challenges around looking at certain countries or sectors. So we need to be using public money smarter, more catalytically. When we talk about the energy transition mechanism, we need to apply that to that thinking about mobilization, to the big commitment yesterday for South Africa. $8 billion for the energy transition. We need that to be catalytic, to be crowding in private capital for new green, low carbon industries. But just while I've got you, we also need to be thinking about the people side of this. This is people and planet. We don't actually get where we need to be on the planet side unless we factor in the just transition to public spending. So hundreds of thousands of workers, compensation, retraining. We need the most vulnerable people to be part of this transition as well, and that's where public MDB funding can come in, and that's where philanthropic.
Right, and we'll come to philanthropic in a sec with Marilyn as well. But where you know, on the PPPs, on blended finance, on a greater role for the public sector, And you mentioned yesterday the announcement on South Africa, and these are tiny little announcements. You know, we need something big and grand and a lot of it, let's face it. Where are you seeing it work best, would you say?
So in my view, the most catalytic instruments that public funders, donors, development banks can use are guarantees. They have the highest mobilization ratios. And we're thinking about how to use donor capital into structures like a guarantee fund. Of course, guarantees don't count towards overseas development assistance. And as we're seeing many countries, including this one, tighten their ODA commitments, we need to figure out how to use that money into structures that work within the system. So guarantees, insurance, technical assistance to do high quality pipeline development. You'll often hear there's plenty of money, the world's awash with money, we just don't have the projects.
Yep.
Well, then we need to be using public development focused money to take that piece, to go in early stage. And it's not just energy, I just really have to reinforce that. When we talk about funding going into avoided deforestation or land use in any sense, 1.5% of climate finance. It's a fraction, it's a drop in the ocean. We want Indonesia, Brazil, the Congo to step up and protect rainforests, stop degradation of carbon-rich ecosystems like peatland. And they've got 1.5%, as you say, a drop in the ocean.
Yep.
And if we can't change those numbers, then we don't get to net zero. Without deforestation free, we don't get to net zero.
Marilyn, I can see you're desperate to come in on this. You know, I want to get your views on the philanthropic side, because of course we heard a number of announcements yesterday, Rockefeller, IKEA, Bezos, you know, where that money is having the most impact on the ground first. I'd like to hear from you, and then we'll talk about blended finance.
So thanks, Axel. I'd like to also first answer another question.
Do.
Something else was triggered. So I think we need to unpack this 130 trillion US dollars, because
plus,
a lot of
130 plus.
130 plus
That's
trillion
the news this morning.
Of GFANZ. You know, a lot of that is public equities.
Yeah.
And so I asked, so what? Tesla is a $1 trillion company by itself. Does that represent the number of Teslas on the ground and EVs on the ground? No, it doesn't. Which brings me back to the banks. I think Howard said something earlier that also triggered a thought, which is the mandate of the central banks in the world. Let's not forget, the US Central Bank, the Federal Reserve, has a dual mandate, unlike many other central banks. Not just stability, but also full employment. Community development finance is also supervised and overseen by the US Central Bank. So more than any other central bank in the world, it should be leaning in on this. It's definitely a part of its mandate. Okay, now on to your question about blended finance. So I think, you know, we have done a number of things in this space. I would say what's missing now, though, is really bringing in Chinese capital. So Chinese firms produce over 70% of solar panels, over 60% of lithium-ion batteries, over 40% of wind turbines. There's over 27 trillion sitting in Chinese bank accounts. Huge amounts of capital, the largest economy in the world in terms of PPP. So we can't do it without bringing in that capital, and that's what's missing today.
Okay, so we're not doing enough to bring China along, is your message. What should we be doing specifically? And I know you do a lot of work in China and on China. Just give us some real life anecdotes as to how we can do more there and bring that on board.
We need to talk to Ping An and China Life and China Construction Bank, in addition to the MDBs and the DFIs in China. And so as we're sitting with BlackRock and State Street and Vanguard and Amalgamated Bank and all these sustainable banks across the globe, we need to bring in those asset managers and asset owners and do blended finance together.
And why is it not happening?
Because we haven't reached out.
We haven't reached out.
We haven't reached out. That's why it's not happening.
And is that because of what we perceive might be a response? Or
I don't think so.
You don't?
I think we haven't taken the steps.
Okay. So who are you calling on then to get on the front foot and be proactive now?
I'm calling on myself. I'm calling on U.S. European-based philanthropy. I'm calling on the DFIs and the MDBs, so the IFA in France, KfW in Germany, so on and so forth, to pick up the phone. I'm calling on all of those who are working on high-level climate champions to pick up the phone and call contacts in China and make this happen, because we have the capital, they have the capital. We need to come together and get this done. Does
it worry you that Xi didn't come here? Does it worry you when we see, I think Reuters Reuters put out a story this morning, permanent representative of China to the UN, some pretty negative comments about the fanfare here in Glasgow. Does that worry you, those sounds?
It's 2021. We don't need the world's largest economy in PPP to fly in to the UK to get the job done. Okay. No, we don't. We can get this done in Zoom.
Good.
Right.
Richard, I'm going to shift tack. We will come back to this, and I want it to be jump in if you want to. Critical for you, Richard, is how you de-risk investment, of course, in the developing world. And we heard yesterday from Ruth Porat at Alphabet on the information failure that Nick Stern talks about. He was here with us as well, limiting consumers in getting the information they need, et cetera, et cetera. And Ruth talked about choosing a flight, for example, on price, on time, but also on a carbon footprint. How can you guys at Aon and others in your field use this sort of data to de-risk and move this process on?
And I'll be very old-fashioned and actually answer the question you've asked me. Look, I think we all talk about the financial markets, and that's what we're here today, talk about finance. But the financial markets break down into two core pools. Well, actually, there's a third one now, private. But basically, there's the capital markets, which is banks and asset managers, and there's the insurance market. And they have different regulatory rules. And I think one of the roles that Aon can do is try and bridge the gap between those two pools of capital. So let me give you an example. We are able, through a thing called New Technology Output Insurance. So where there is a green tech firm, which banks can't lend to because there isn't the credit performance or the robustness of the technique or the engineering, insurance can come in and insure that solution. We've seen this in a wonderful company which can microwave end-of-life tires and turn them into reusable rubber and energy. So but that is a startup which banks couldn't lend to because there wasn't the robustness of proven engineering technique. Insurance can take that risk, and suddenly the banks can step in and lend against a company with a AAA insurance policy from a large reinsurer. That is what we can begin to do here to really, on the ground, mobilize this great big gathering of finance. And a lot of the talk yesterday and today will be, how can we convert we must not invest in carbon to how do we invest in new? I mean, if every $1 invested in carbon was matched by $3 in new stuff, how do we do the new? So, and then the other thing we're working on, and actually working with NatWest, Howard, is Project Carbon. Can insurers guarantee carbon offset? So if you are a company that's going forward trying to go net zero, but you generate carbon just because of what you do, and so you invest in carbon offset, and you wake up on a Sunday morning, open the papers, and discover the thing you invested in actually wasn't offsetting. It didn't deliver. Well, insurers again can come in and we can help insurers understand it, insure it, and de-risk that.
Are you
allowing banks to lend those companies? So we can hopefully, what we can do is try and bring those two pools and bridge the difference between the different regulatory behaviours, and hopefully on the ground make things happen.
Are you having these conversations with the banks here this week and next week? I mean, it seems to me that we're almost for the first time saying, look, guys, we could do this for you, but you must have been saying that for a long time now. Are they just not listening?
No, they are listening. Like everything else, the conversation is gaining in volume and momentum, and yes, we are. I mean, again, we can. IP is something which is an amazing thing, which every startup and tech has, but banks can't lend against IP. We can identify it, value it, and insure it, allowing the capital markets to suddenly get into it. So we are seeing traction, we are seeing interest, and quite frankly, every event like this just makes it easier. And if the regulation, Howard, and on the accounting comes out like you describe, it's going to be even easier for banks to say, how do I invest in this? Make it easier for me. And I think that's the role that we see, the opportunity we see. And suddenly you have got your 130 trillion plus, which is going towards not only new ideas and new tech, but also developing economies, because that's one of the big thrusts of today, yeah? Is how do we get that 130 trillion into developing countries? And we mustn't forget also Larry Fink's point yesterday, we need to make sure that the public, as in quoted companies and the private companies, are all subject to the same rules, so that all that money goes in the same direction.
Shriti, Vadera, and Howard, I'm going to come back to you, and indeed Gonzalo, to you on the SME bit in a minute. But Shriti, Vadera, on back to developing nations, emerging markets, and why it needs special attention on climate finance, why we're not seeing the moves that we need to see. I'd like to ask you about the risk here. The risk, the ambition, transparency, fears on data, et cetera, who's getting to grips with that in many parts of the developing world?
I think that data and disclosures is not just a problem, by the way, in the developing world or in emerging markets. It is more acute in certain low-income countries, not just for this issue, but for all issues because of capabilities, because of systems, etc., that are still work in progress. It is a problem for us today in developed markets. So actually, the whole value of data is a real problem in the disclosures element, and that's why, as Howard said, it's still an issue about whether you can whether the Bank of England stress tests or any other stress tests, or whether you can increase capital requirements as a result of this when you don't have adequacy of data, because everything is based on models for stress testing and for risk assessment. And models, if it's rubbish in, it's rubbish out. You need proper data for models. So I think it's a problem for everybody. I really would like to say that the Western centricity of some of the debates is quite problematic. For example, in the discussion on disclosures and on data, we are very focused on carbon intensity WACC rather than focused on country plans that show you how they transition from high carbon intensity to low carbon intensity in a credible way that is financeable without all of us being beaten up for financing something that starts with high carbon intensity. And that is what is putting emerging markets and lower income countries, or putting them off engaging in the debate, not just the issues Mariam said about us not reaching out. And the other thing that we forget in the debate is that most of this financing for these countries will come from their own capital and from local domestic capital markets, which we need to work to develop. Insurers like the Prudential can do that because we have long-term assets from our customers that we can invest domestically. So we just talk here about Western capital, Western institutions, Western banks, Western investors. And so I think that voice needs to be really very central and take account of the realities that they have 16 other SDGs to finance, not just this one. And they have, in some cases, a lot of, in low-income countries, extreme poverty, and they need to create energy security. And they're having a sort of quadruple whammy in a way, because they're going to be the worst hit. They have the least money to finance it. They've emitted the least, in fact, in reality. So the element of financing that is able from the public sector that is about adaptation is extremely important for us to be able to leverage off and then support in the other ways that we can to get into energy transition, starting from high carbon, which is where they are, and not sort of shying off it. We don't want to have an unintended effect of getting capital away from emerging markets rather than into emerging markets, which is where some of the disclosures may take us currently now.
All right, very good. Shriti, thank you very much indeed. And getting local capital to work, I mean, thank you for raising that, because it's something I haven't heard discussed enough. SMEs is something, Gonzalo mentioned SMEs, and I want to talk to you a little bit about this, Howard. The massive role SMEs have to play in getting us to net zero. What does really practical help for these companies look like, do you think? And Gonzalo, I'll ask the same question of you.
Yeah. Well, I was intrigued by Richard's idea of turning uninvestable assets into investable assets with a bit of insurance and making them AAA. We did that. That worked really well in the subprime mortgage market, actually, if you recall. I hope your idea is a slightly different one.
I think we're talking different methodology.
Good. But I think it's actually, more seriously, I think it is a promising idea, in fact. And I'm always conscious, since I also chair an insurance company for my sins called Inigo, a Lloyd's agency, that insurers and banks are operating still in different parts of the forest. And I think that working together on some of these issues would be quite advantageous. So, Richard, I mean, I applaud that initiative. Sounds like a good idea.
You can go off and have a chat after this.
Yeah. Well, we're already, our institutions are already talking. On the SME point, we published a paper just about 10 days ago on the opportunity in the SME sector in the UK. And we believe that is a very serious opportunity for banks, that there is a massive investment need for transitioning to low carbon business models, and that can be unlocking, hundreds of thousands of jobs and everything else. So we believe that's a big thing. But in order to get there, of course, you need to give people, small businesses, the tools. So we're working with a number of smaller sort of kind of quasi-fintechs, if you like, want to call them that, who are developing tools which allow people to measure their carbon to start with in a very simple way, and also measure the opportunities to decarbonize their business models, of different sorts of techniques of changing their transport, etc. And we are developing that so that our bankers will be able to go in and say, look, here's a tool, an app that actually will tell you how to measure what your carbon actually is at the moment, and gives you a very simple menu of things that you can do which would reduce it. And then, of course, we can also then lend against those techniques.
Am I right in saying you're doing something with Microsoft?
Yes, we are.
We are.
Yeah.
I guess because in the US, and again, I may have this wrong, but they're doing. It seems to me they're doing a lot more with SMEs on in terms of helping them with offsets, and I think Stripe in the US is doing that. But we're not really seeing that sort of activity happen here.
Yeah, well,
why aren't we?
Yeah, well, that's another part of the forest as well. I mean, the offset market is difficult. I mean, we do quite a lot of it, but I think. Richard made the point that some of these offsets aren't necessarily what they appear to be. And so we are working with a group of banks, with National Australia Bank, actually, with CIBC of Canada and Itaú of Brazil, to try to standardize these offsets, the voluntary offset market, and try to put some standards around that. And I think that could be quite a helpful initiative too.
And sorry, on that particular one, that Project Carbon we're involved in is using blockchain, which makes it then suddenly very transparent and robust. So I think that initiative is amazing, and we're looking forward to seeing that evolve. Sorry.
Yeah, no, Gonzalo, do you want to? I mean, you brought the SMEs up in the first place, but what do you make of what you've heard here, and what the likes of NatWest are doing, what we're seeing in the US, which seems to me to be a little bit more progressive. I don't know if that's fair.
Well, let me first start, of course, not answering your question, but referring to the plus. I don't want to create that high expectation in terms of the number, okay? But even when it comes to, again, and mentioning what Shriti is referring to, the importance of not only focusing on the North or in the West. In Latin America, we have about $1 trillion of assets that are incorporated into GFANZ. Today, we will see the Itaú announcement as well, like joining Race to Zero. We have, of course, Bank Colombia and Banco Estado de Chile and some asset managers there. So sometimes the amounts are different when it comes to the north to the south, but we're seeing a lot of momentum in terms of how this is landing in a very short period of time. And I think that it's important when it comes to another. I don't want to sound naive. We're not yet there. We have a lot of things to be solved. But when it comes to just seeing where we are, we tend to see the problems. And that's the frame, right? And we have to stop just staring at the frame and watch the film. Because the film will show us the challenges and the opportunities, right? Let's try to change our mindset of one that is focused on the problems and really realize that there are so many challenges and as well so many opportunities. When it comes to SMEs, and related to Race to Zero, right? Race to Zero campaign, the broader campaign putting together businesses, investors, and subnational governments and universities all together into the same goal through science-based targets. We had two really great tools for SMEs, one being the B Corp Collective. I'm one of the co-founders of the global movement of B Corps, and we have developed this fantastic program for mobilizing, and many times our SMEs, 1,600 companies are now committed through the Climate Collective from the B Corps, and many of them are SMEs from the Global South, all of them to 2030. Net zero 2030. Then we developed with the International Chamber of Commerce and Women Business and Exponential Roadmap, the SME Climate Hub, already translated to different languages, that is being used by multinationals to align the value chain also for those companies to know how to proceed. We have a great entrepreneur here from Bulgaria with a company called Plan A, putting together all of these tools towards the banks. And Lubomila is now working with banks in all around the world, mostly in Europe, but now landing in Latin America as well, to mobilize this in a very concrete and practical way. So I think that there are many things happening, but let me refer also to something that Shriti mentioned, because the challenges that she was referring to, for me, are a great example of when the ESG are totally related to the G. When the G, the governance, the culture of these institutions need to change as rapid as the commitments have been changing.
Yeah. Okay, good. Marilyn, I know you wanted to come in on that. Give me your thoughts. This idea of the frame and the film, I like that. I imagine that's very much the way you
can use it.
You think, I think we all are. You think about this as well. Yeah, go ahead.
I think we need to support the real economy banks. So who are the banks that are actually financing the SMEs? It's not the banks that are playing around in derivatives. So when we brought PCAF, the Partnership for Carbon Accounting Financials, globally, so from the Netherlands to the global stage, we actually started with the real economy banks with GABV, the Global Alliance for Banking on Values, across the globe. Ecuador, South Africa, Mongolia, everywhere in the globe has these GABV banks, these banks that are servicing the real economy. Where are they? Are we supporting them? No. So when it came to scaling this initiative, so measuring and disclosing and harmonizing the approach by which we do that, to carbon emissions for loans and investments, we actually brought in the credit unions in the United States. Yep. Over 5,000 cooperative banks called credit unions. They are front and center, and they are the ones that have saved us in this COVID-19 crisis by supporting the small businesses.
I've got to really wary on the time here. We've only got a few minutes left, but it's always the same, right? What are the most, and I'll start with you, Marilyn, then come to you, Katherine. What are the most exciting conversations you're having here in Glasgow, have had here, and are looking forward to having? And who are they with? Some of these bigger banks? Are they with some of the Bulgarian entrepreneurs? What excites you most?
Unfortunately, we don't have a diverse constituency in Glasgow right now, right? So the world is not here physically. This is day one for those of us who work on finance. So you have to ask me later on in the week. But I'm excited for this conversation. I'm excited about bringing in all capital and focusing on those who are really, those institutions, and scaling those institutions who are really getting the capital in terms of lines of credit, loans, and other innovative structures, revenue share, to both the entrepreneurs and startups, but also across the supply chain in terms of companies that are in the real economy with climate solutions.
All right. What about you, Katherine?
I'm a bit nervous, actually.
Are you?
Yeah. And it's partly because not everyone's here. It's partly because things are too small. But it's partly because we're reinventing the wheel. If we have this conversation one more time, we'll, play the video again.
But what you've just outlined, though, is a pretty bad starting point, though, isn't it?
Well, that's why I'm a bit nervous.
That's what worries me.
And then let me shift, because I do want to be positive as well. I came to COP incredibly optimistic. And I'm optimistic because this is now a conversation about the how. We actually all get the why. The torrential flooding, which made it hard for people to get up to Glasgow, was Mother Nature, I think, giving us a little kick and reminding us that climate change is real. We get the why, and so now we're discussing the how, and the fact that this is the finance COP makes me nervous but optimistic.
Yeah. Yeah, and just throwing it ahead, Gonzalo, let me ask you this, and then Howard and Shriti as well. Energy is a focus tomorrow, carbon pricing on Friday, or at least for us here in the studio, and indeed the wider piece. What do you hope to leave with?
Well, I think that it was really important to start with some basis, having the solidarity being expressed with the right, probably not enough, but the right conversation about vaccination plans and the 100 billions. We need to deliver on the promises of the past and be capable of organizing globally in order to tackle the crisis. But I think that it's really important to realize that in these first days, we've seen two major steps forward, being nature and finance, two kind of missing links of this equation, very progressively, and adaptation and resilient positioning at kind of the same level of mitigation. Those elements at a political level are extremely important. That sets the right type of message to the negotiators in those rooms.
Yeah, okay, Richard, very quickly.
I'm born optimistic. I'm optimistic. I think I like we are now talking the how. And I think, the more we have this conversation, the more it is possible that we can bring teams together to get this done. I mean, I think I take Attenborough's point. We created the problem, we can solve it.
Yeah.
Humans are amazing people.
Okay. Shriti, it's been great to have your voice in this conversation today. With the Prudential hat on, what are the next big conversations you need to be having?
We're going to really focus on an energy transition mechanism for Asian countries who are coal heavy at the moment. And that is a fund for public-private partnership. And I hope that we can really get that mobilized and consult on it adequately with the Asian Development Bank in the lead. And the second thing, I really, really, really hope that there will be something on Friday around carbon pricing that will make what is essentially an externality, a global public good, into something unlock the trillions we're talking about, because without that, we can't do it.
Okay, Shriti, thank you. And Howard, just a final word from you. We started with the central banks and the role of the central banks. And it seems to me you feel that they can, will, and should be playing a much greater role in, first, their understanding, the extent to which they intervene going forward?
Yeah, I think they will be. I think they've set down that track. I think it does need to be done in a collaborative way here, because they can only work on the data we can supply them, and they can't just invent data we haven't got. And so I would like to end on the basis that I think you're right that the why is not debated, the how is the big issue. But I guess I'm a bit dull and say, what about the what? And the what, by which I mean all the measurement and working out just how we monitor progress. I think that's where we've made a bit of a step forward this week, with some rationalisation of the reporting, transparency and disclosure and all of that. And that's what I'd like to take away with me.
Fantastic. Howard, thank you so much. Gonzalo, Shriti, Katherine, Richard, Marilyn, it's been a really great discussion. Let's continue it. That's it for the show for this morning. We're back tomorrow, Thursday. We're back Friday as well. Tomorrow, as I said, is a focus on energy. I'm Axel Threlfall with Reuters. We will see you first thing tomorrow.